It's the start of the super cycle because we have institutional capital and retail capital.
Take me back to our last conversation. What has changed in 1 year?
We literally predicted that the ETFs would happen, and we also predicted that in total crypto market capitalization would go up to 6 trillion in the cycle, and it's already at $3 trillion.
A lot of people say, oh no, crypto's too risky, I can't get into it. But you need to step back and say, what is my profile? What kind of capital am I comfortable investing?
The first question on defining who we are as an investor is that some people may think I'm conservative or I'm progressive, I'm aggressive, I'm moderate, but it's a lot more nuanced than that. It really depends on how much of your total net worth is being put into that play to fully understand how you behave.
I love this concept, and I also love it because it gets you used to risky assets.
Exactly.
The decisions you make in the next 12 months can literally make or break your future. How would you wrap this all up as people trying to become adaptable investors?
If I could write a letter to myself when I'm 50, 60, 70, the only advice I would give to myself as an investor, I say always stay a child at heart. Kids are curious, are always willing to try something new, to listen to new things. The creatures that have lived the longest on this planet manage to do so because they're adaptable. So stay safe out there, guys, and be ready to take your profits and enjoy a beautiful winter.
Hey, I know investing in crypto is scary. It takes a real leap of faith because there are so many scams, rug pulls, and bad actors out there. It's a dangerous business, which is why 95% of people lose all their money. Well, that's why I created the London Real Investment Club, so you can access the hottest deals on the planet and use the crypto bull market to create the generational wealth that you deserve. Join my team of over 100 people from around the world that are making millions of dollars behind the scenes investing in blockchain, AI, Web3 games, DeFi, Bitcoin, and more. Don't miss out. Click the link below to book a call with one of my team now. But hurry, this bull market will end soon.
I know investing in crypto can be scary. That's why you gotta join the investment club. Pull the trigger. Let's do this.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go? This is London Real. I am Brian Rose. My guest today is... This is London Real. I am Brian Rose. My guest today is Alex Fazel, the cryptocurrency expert, TEDx speaker, broadcaster, and blockchain educator. You are the Chief Partnership Officer of SwissBorg, a team of finance and technology experts dedicated to democratizing crypto wealth management. SwissBorg is the largest Web3 investment and marketing platform in Europe, with more than 800,000 verified users and over $2 billion in assets under management. Your aim at SwissBorg is to bring TradFi and DeFi together under one roof and provide true utility to communities all over the world. Alex, you are a massively popular figure in crypto, known for connecting companies and individuals with a shared vision of financial freedom and innovation. Looking ahead, you've said this year could mark a turning point for cryptocurrency adoption, the growth of DeFi, and more inclusive global financial system. You ultimately believe 2025 will be the dawn of a new financial era where innovation and expansion redefine global wealth. Alex, welcome back to London Real in Dubai.
Not just 1, 2, but 3 times now, Brian. I'm over the moon to be back with you.
Dude, it's crazy. You were here 1 year ago, almost exactly, for basically the grand opening of our studio in Dubai. You were the first guest. You're the first guest this time. And I want to go back and see what has changed in a year. I also want to take you back literally almost 3 years, where we sat down in our London Real studio. It was my 10-year anniversary at London Real, and Bitcoin hit the all-time high of that cycle that day. I think it was 69 and change that day. And we were looking ahead. We were expecting 100,000 Bitcoin by Christmas, Lambos for everybody. And then all of a sudden, we walked right into this bear market. And we're back. We made it through. But I believe that we have tons of lessons that we can impart on anyone watching or listening. You've got crazy history going all the way back to the 16 and 17 ICO days when SwissBorg was launched. But now you've dragged me through a few cycles. And what we're going to do today is talk about 6 really important points that can make you maximize this bull run and also keep you out of trouble. Because I think the biggest problem people have is the mistakes they make in this bull run. Bad decisions will cost you 10 times more than the profits you make on a good decision, I think. And so I'm super pumped to have you here. Okay, so take me back to our last conversation 1 year ago. We're here in Dubai. We can start to feel that something's changing, right? I think Bitcoin has started to rally. I don't think the ETFs have been approved yet, but we knew something was happening. What has changed in 1 year?
That's exactly it, Brian. So we literally predicted that the ETFs would happen within the same month of January, which actually ended up happening. And we also predicted that, at the time, the total crypto market capitalization was $1.5 trillion. We saw it potentially going up to $6 trillion in the cycle, and it's already at $3 trillion. So it went up 2 times already within that year. So, and a lot of the other predictions that we made and some of the signals we called out were right on point. So just the duration of the cycle, which we may cover today, that is looking a little bit weird, and there's some unusual factors because we focus really on crypto asset markets, but we didn't focus on external factors like the global macro point of view. So hopefully we can cover that today.
Yeah, and today we're going to be talking about all of those things that we didn't cover last time, and there's some amazing slides and graphs, and we're really going to go deep on a lot of these pieces. Like you said, the total crypto market cap has doubled in a year, but we don't believe that this bull run is over yet. We had predicted last time that when it got to maybe 6 or 7 trillion, maybe that was a time to start selling. And we're still a little ways away from that. And we're going to talk about that today. So let's jump in with point number 1, and that is talking about your investor profile and your mindset. I think this is so important. I get asked this question all the time, Alex. And again, this is not financial advice. Do your own research. Of course, make your own decisions. But, a lot of people say, oh no, crypto is too risky. I can't get into it. But you need to step back and say, what is my profile? What kind of capital am I comfortable investing? I run a crypto and DeFi academy, and the 25-year-olds want to put much more of their portfolio into crypto than the 65-year-olds. And I think everyone has to ask themselves those questions. So what do you mean when it comes to this? We'll throw some slides on the screen as well, but what is an investor profile?
So an investor profile, I think, Brian, is just understanding oneself, really how we behave. Because, you can try to classify yourself and put yourself in boxes, but we're so nuanced as human beings. And really, there are so many questions I think every investor needs to ask themselves. But today, if we cover at least the basics, the 4 or 5 basics that everyone should have a direct, clear answer to, then that's probably good enough. More than at least the average investor.
Yeah, and most people never think about this. They just start buying meme coins, and then they never really know why they're doing it, how much. And I think that's why a lot of people get into trouble. Maybe they risk too much. Maybe they don't know their limitations.
Exactly.
And then so many people leave crypto thinking, oh, that sucked. I lost money. That's not for me. When in fact, if they just had some of these mindsets in place and had some training and some mentorship, they could get a ton out of this market. So you've got on this slide we're going to put up there kind of your risk return mindset. You've got a % of total net worth that you're going to put into crypto. If you're a newbie, that's at 0. If you're a total crazy degen, you're probably at 100%. You've got short-term thinking versus long-term thinking. And then you've got this financial IQ, which maybe you can tell us more about. How do people start thinking about these things?
Yeah, I think the first question on defining who we are as an investor, and you know this better than anyone, Brian, because you've been in finance your entire life, is that some people may think I'm conservative or I'm progressive, I'm aggressive, I'm moderate, but it's a lot more nuanced than that because it really depends on how much of your total net worth is being put into that play to fully understand how you behave. You could be extremely conservative. I could be extremely conservative, but we want to have fun on a meme coin, right? We find this cultish vibes fun. We're like, hey, I'll just put, $1,000 or $100. $100, if that represents 0.001% of my total net worth. Am I an aggressive? No, I'm just having fun. So I think a lot of people, rather than thinking, am I conservative, moderate, or aggressive as an investor, are thinking about it wrong. You really need to attach it to the percentage of your total net worth for it to actually be accurate. And I don't know what your thoughts are on
Yeah, I
that.
love that. Jordan Belfort, the Wolf of Wall Street, who we've both met, and he's been on my show 4 or 5 times. He just wrote a book about investing. And, for him, it's like, for conservative stuff, he's telling people to go in the S&P 500. But even Jordan says, look, you can have a tiny little capital on the side that you can have fun with. Put it on some penny stocks, put it on here, punt this, and you can enjoy the markets without putting 25% of your net worth into some risky asset. So I love this concept. And I also love it because it gets you used to risky assets. So many people look at memes, especially if you come from the normal financial markets, and you say, what the heck is this? This literally means nothing. It's worth nothing. And yet the market cap is, I don't know what Doge is over $10 billion, right? So there's clearly value. Maybe you start kind of small with what you're saying. So people should think about total percentage of capital and how they allocate that to risky assets as opposed to just some general sense, is what you're saying.
Exactly.
Okay. All right. Love that. And that all goes down to kind of your percent of total net worth, your risk return mindset. This investor versus trader is another one. And I guess that's about timing. Can you speak a bit on that?
Yeah. So I guess once we understand who we are, how we behave relative to the net worth that we have, disposable income or investable income, then I think really an important step is to understand the different timeframes. Obviously, if you go into really short timeframes, you're more of a trader. Some people will trade at the minute timeframe on the charts. That's something that it's too much stress for me. And I know as myself as a human being, I can't take that. Already swing trading, if I want to swing trade, like rebalance my portfolio over 3-4 months, it's already stressful for me. So I realized that me as a human being, the trading gig, I just can't do it. I don't have the guts for it or maybe the stamina. So I'd rather see myself as someone who likes to think at least 6 months before taking any type of profits or reallocating my assets. And for my total net worth, obviously have goals based on years. How much money do I want to make within the end of the year, within 3 years, within 5 years, within 10 years? What is my ultimate definition of financial freedom? How much money do I really need to be happy? I don't need billions of dollars. I don't even need hundreds of millions of dollars. I just know what I need to be happy and be financially free. So I think, really, and it's, believe it or not, Brian, if I ask someone, what is your goal in this market? To most people, like, give me a number, a tangible, dollar number, or give me a percentage in terms of ROI. Most people don't know. So these are questions that seem easy, but that are quite difficult, that demand lots of research and reflection, I think.
Yeah, if you don't have a specific goal, I think they call them SMART goals, which is specific, measurable, realistic, and time sensitive. So I want to make $5 million in this crypto bull run. Okay, now that might seem silly to people. That might seem unrealistic to people. That might seem low to some people that are listening to this. But it's important because now you know exactly what you have to do. Okay, how are you going to make that 5? You're not going to make that putting everything in Bitcoin. You're just not. The risk profile isn't there unless you have, a lot of money that you want to put at risk. So that means you have to start changing your risk profile. And we'll talk about going into lower caps later and stuff like that. But I agree with you. Everybody listening right now should come up with a number. What do you want to make over the next 12 months, maybe 24 months, maybe 36 months? And then you can start acting according. So I love that. The second part is most people, I think, get into this market and they trade too often.
Yes.
And let's be honest, everybody out there, from the news websites to the centralized exchanges, which we'll talk about later, to a bunch of other players, they win when you trade. There's that great movie called Casino with Robert De Niro and Joe Pesci. And he says, what do they do at the casino? Keep them playing, because in the end, the house takes everything. And there's that famous scene where there was that high roller from Japan who comes in and he makes 10 million and he's about to leave. And they put him on the jet and they're like, oh, I'm sorry, the jet engine doesn't work. We'll comp you at the hotel. You don't have to play. And of course, he has to go back to the tables and they take all of his money from him. And so I would say, be careful when you see a website that comes out and gets you into FOMO, fear of missing out, or FUD, fear, uncertainty, and doubt, and getting you to buy and sell things, because ultimately an exchange makes money on the back of that. most people should probably hold. I'll say one other thing. I had Dan Moorhead on our show, London Real. He runs Pantera, which is one of the big VCs. They were buying Bitcoin for their fund back in 13, I think. And he said, Brian, we've got 45 full-time day traders managing some of our, spot funds. And he said to me, Brian, we barely know what the hell we're doing. So how do you expect an individual to try to be able to stay on top of these markets? I believe it's impossible. And I believe you'll go crazy trying to do it.
Exactly.
I'll say one more thing. People think that a trader is a person that sits at their 8 screens all day long and looks at the screens. No, a good trader doesn't look at screens all day long because that's a waste of time.
Yeah.
A good trader does their research, puts on their positions, and then works on the rest of their life.
Yeah.
Be a good parent, get a good physical practice, research the next thing, build your business, but you don't need to be looking at a screen all day long. So that's my take on it.
It's such good, it's really, really valuable advice. And a lot of the best traders that I know, and I know a guy who's actually trending on Binance. He's the top trader on Binance right now.
Chris Crypto.
No, he's one of the
up
top
there
guys.
too. Yeah.
Shout
Shout out to Crypto. He's gonna be
He's
there.
a great trader as well.
Yeah, he was like number 1 trader, I think, on his Ripple trade he did a few weeks ago or something. So yeah.
And they're really tight on their goals. As much as, you're feeling FOMO or FUD, when there's a goal, there's a goal. One of my friends who was the head of derivatives at Morgan Stanley back in the 90s, and he's great career. He's made incredible fortune. He always told me, Alex, even if we knew that the stock would go up in price or whatever product they were trading, the goal is the goal. You execute at that particular goal. That's what the guideline is, and that's what it is. I think it's all about goals. And one thing about financial freedom, Brian, I think, which is really important when it comes to setting our life goals, our life financial goals, is I always tell someone that imagine through low risk interest, you can earn between 3 to 5% a year on the capital that you have there. If you want to take slightly more risk, maybe there's some, products that can in real estate that can yield 7 to 9%. So if you took all your capital or a good percentage of your capital and you put it and you would earn 4 to 5% a year, or if you're a little bit lucky and you have good connections, maybe 6 to 9% a year, how much capital would you need to get that annual income that you want to just live your life freely, and do whatever the heck you want? And for example, a good friend of mine said, I want $20 million because I know if I put $20 million and let's say I put 70, 80% of that, let's put $15 million in a bond, for example, that can generate 4 to 5% currently on the markets. That's a lot of money, right? That's more than $1 million or roughly $1 million a year doing nothing, let alone the money that you're reinvesting that's making money elsewhere. So $1 million, we're talking about $150,000 a month. That's more than enough for me, but the most important part is, as you said, is having those goals and sticking to them, I'd say.
Yeah, very much so. And going back to your earlier point, I had a student one time in my class and he said something really good. He said, I judge the success of a trade not by how much money it makes, but if I stuck to my rules.
Yes.
And so again, you look at Crypto, when he puts a big trade on, he's got the stop loss in and he's got already probably his profit taking level already locked in. So these people that are doing this, they put that in and they don't make emotional decisions down the line, and they're protected on the downside. And that way they can put the trade on and literally set it and forget it. They can move on. You're not thinking about it at 4 a.m. You're not checking crypto on your phone. I think checking crypto prices on your phone is a bad sign that you're not doing your risk management correctly.
100%.
And so I just say these are great points. And also, find out what you need. How much do you need? And then kind of decide accordingly. Did we cover pretty much everything? Financial IQ, you kind of talked about that.
So this is, as you can see in the slide, says intelligent investor. I'm going to just say that my title is the dumbest title possible because I don't believe in the intelligent investor, Brian. After really looking into this, and for example, when I look at the value investor like Warren Buffett, how well he's performed from the 50s all the way to 90s, but then you look at his performance in the 21st century, he's actually underperformed the S&P 500. He's missed out on a lot of huge tech stocks, including the AI stocks, including some of the FANG stocks where he came in way too late. He got Apple right.
Late though,
right? And Microsoft, he was literally friends with Bill Gates. You cannot forgive that, and still missed out on the Microsoft stocks.
And so, missed all crypto as well.
And he missed all crypto. Bitcoin, the best performing asset of all time. So what I realized, Brian, the whole value investor, intelligent investor, Benjamin Graham book, I think the best term and correct me if I'm wrong, is not intelligent, but the adaptable investor, if that makes sense.
Yeah.
Like I feel like adapting to investments, to trends in life is going to bring you way further. When you look at the longest living creature on the planet, like the cockroaches or the worms, are they the strongest, the survival of the fittest? No. Are they the most intelligent? No. But are they adaptable? If there's a meteorite or something that hits, our planet, would they manage to hide somewhere, or would some sea creatures go under the water and avoid that explosion to survive? At the end of the day, adaptability, I think, is key. And even when you look at Fortune 500 top criteria, like if you look at all the CEOs, they will say that they're not necessarily the smartest person in the room. Obviously, Elon Musk he's a one of a kind type human being, but most of them also have the trait of adaptability, because they can pivot where the market needs, where there's demand for a specific product or service. So I don't know, call me crazy, Brian, but I feel like adaptability is maybe a better word than the intelligent investor, the adaptable investor.
Yeah, and especially so in Web3 and crypto markets, because look at this cycle. We've got all these new narratives we never saw coming. We never saw this meme coin super cycle. We never saw these other aspects like DeSci, and we never saw AI coming, or let alone AI agents, which is super hot now. We didn't see so many things happening here. All these rise of all these L1s. I thought we'd have less L1s, and now there's brand new ones. There's so many things happening. And if you can't adapt to that and you're stuck in the old days, you're going to miss all these trends. And I'll say something about Warren Buffett. I'm good friends with Dan Tapiero, who runs a couple big multi-billion-dollar funds. One's called 10T, one's called 1RT. We're actually investors in there, full disclosure, with our investment club and ventures arm. But Dan said, look, Brian, if you give me an hour with pretty much anyone in the world, he's like, I can pretty much orange pill them. I can walk it through. But he says there's one factor that makes the difference of my success. And he said, it's not their education level. It's not their wealth. It's not what country they came from. It's their age. And he said, if you're under 50, I can pretty much get you to get this. If you're over 50, I'm going to struggle.
Yeah.
Now, take that up to 80 plus like Warren or my dad, and you can talk to your blue in the face, and they're going to look at you like you're crazy.
Exactly.
Now, I talked to my son Damon a couple days ago. He's 7 years old. He's all over Roblox. He owns more digital assets than, probably Dan Tapiero does, right? And when I tell him that he can convert his digital assets to real money via crypto in the marketplace, he's like, yeah, duh, Dad. Of course I can. That makes sense. So he gets it because they grew up with digital assets. They grew up with digital technology, but Warren didn't. And I think that's why he missed those edgy trends like the internet and, a lot of these other plays, including crypto. And he still thinks Bitcoin's rat poison. And I hate to say this, but I'm going to say it. A lot of those people, they're going to take those views and they need to take them to the grave with them.
Yeah.
Because they're just not going to change. I don't think you can teach really old dogs new tricks because they're not adaptable, like you said. Now, look, Warren obviously did a lot of things right, and he probably didn't put money into bad trends, but he missed some things as well. So I would say I agree with you.
And sometimes, Brian, being too intelligent is actually dumb.
Yeah. It's funny. I saw some comment of somebody on Twitter, and they said, you know what? In this cycle, your newbie friends are going to make more money than you.
100%.
Because these people haven't been burned, and they're going to go in with probably maybe too much risk appetite for their own portfolio. But in the short run, they're going to make money.
In the short run, again.
And let me just remind you, in the bull market, everybody's a genius. Everybody keeps talking about the one meme coin that make money. They conveniently forget about the 10 that lost money because our brains do that. And wait until the market starts to dip. You'll really see who has their clothes on when the water goes out. And so, yeah, get ready for all the greatest traders in the world coming out this year. It just happened to buy some stuff. Yeah. But let's just see what happens when the water goes out and the markets go down. Who's left holding the money?
100%.
And that's the aim here. How much cash do you have in the register at the end of the cycle? I don't care if you made a 20x, if you gave back 19x of that. That's not helpful. So that's kind of what we're talking about today.
Exactly.
Okay, let's talk about point number 2. And that's the start of this super cycle. We're going to stick a graph on the screen that talks about maybe the hangover that we had from 2022. Can you walk me through this concept? Because again, when you and I sat down in 21 in September, October, it was Bitcoin all-time high. Then we went through what people in crypto said was probably the most brutal winter they've ever seen.
Yeah.
Talk to me about that. What happened? How did you feel going through that?
Yeah, absolutely. And I know it's a bit of a bold statement. As you said earlier, as we were chatting before the show, is it wasn't it before the super cycle, or isn't it the next one the super cycle? But the way I would define it is really by measuring global liquidity. And global liquidity can be broken down into two core segments: institutional capital and retail capital. And I think, as you know, obviously with ETF and Ethereum ETF as well, not just a Bitcoin one, and they're predicting other ETFs, the institutional interest is definitely starting to come here. And they're some of the greatest investors of all time. The CEO of BlackRock, which, as you know, is the biggest financial institution in the world, they own literally everything. They are super bullish Bitcoin, and obviously they want to sell. There's some sort of incentive as well to do so, to share this positive sentiment. But to me, it's the start of the super cycle because we have institutional capital and retail capital. Now, the issue that I'm seeing now, Brian, is that some of the retail capital, especially if we're talking about the current people who are already orange pilled, who already love the markets, we lost a lot of money in the 2022 to 2023 era. We had so many black swans that's already kind of distorting the duration of the current cycle. Which, remember, like our three signals from the previous show, we talked about the average duration of a bear cycle versus, and we had the 4 seasons. Now it's complicated because we've compromised. We're kind of like walking on one leg, limping. We've been injured by all the black swans and malpractices of the previous cycle. So I just really define the super cycle as that intersection of institutional capital coming in, retail capital coming in, and people not just there for Bitcoin, but really understanding all the value accrual created by the dApps in the entire ecosystem.
Okay. And so these big black swan events, like we saw FTX dropping 11 billion, we got Terra Luna dropping 40, we got Mashinsky dropping 58 billion, you got another 7 billion in scams and rugs, and Voyager dropping another 4. That's 100 billion gone. That burned retail so bad that it's taking a while to recover, is what you're saying. And so just to define super cycle, it's a cycle that lasts longer than we would expect. And I guess your point is that retail got so bruised up and they took so much pain and so much maybe paranoia that they're slower to come back.
Exactly.
Is what you're saying.
Yeah.
Okay.
And that's why maybe the duration kind of metric signal will not be as accurate as it may have been in the past.
Okay.
I mean, obviously we still have the 4-year cycle, but how long will the summer last is a very difficult question to answer.
It's interesting because every time we start in a bull cycle, people, they want to believe there's a super cycle, right? Because the longer it lasts, the better. So you always have to kind of check yourself, but as the instruments get bigger and broader and there's institutional liquidity, we would expect these to widen out. And we are going to talk about that a little bit later as well, about how we think these cycles will widen out. Global liquidity and crypto liquidity. This is something that's interesting to talk about. I don't think we went this macro last time. What do you see there, and what do you want to talk about when it comes to interest rates and all these things happening around?
And I'm going to need your help on this one, Brian, because you actually lived it. You saw it before your eyes, so you're not just like me reading different papers online. So I think as you've actually experienced it, you'll have many comments. But what I've realized is from just before the dot-com bubble, when they started introducing monetary policy, when they started really controlling the market with the FOMC meetings, with the Fed rate, interest rate, because there is a very clear graph which says that, before the dot-com bubble era, like the interest rates didn't have such a significant impact on riskier assets like the stock market. But once they introduced monetary policy, where they had a bit of a switch where they could control the interest rates more, then all of a sudden that concept of risk on, risk off markets appeared, right? And so ever since that pre-dot-com bubble era, I would say early 2000s, with Matty Greenspan and all the guys that were working for the Fed, they realized that they can control this machine, this big financial machine a little more. And all of the investor sentiment would literally depend on this little switch that they have. And ever since that, right, for the past 20 years, Brian, you can see how important these meetings are on the sentiment of the market and how we see the future of the economy.
Yeah, and it's funny because people that are new to the markets, they come in and they say, why are we all walking around on eggshells and tuning in to see some, old white dudes come on a microphone that are employed by the US government, and we're trying to read the tea leaves by the vocabulary they use to see if they think the economy is growing too fast or when they're going to raise or lower rates, as we listen to Jerome Powell. And people are saying, why does this even exist? In fact, Elon has even said we should abolish the Fed and, allow the president to make those decisions. Now, I don't know if that's the best thing, but the point is that most people, that they're shocked that this really controls the world. Now, when I got to Wall Street in 1993, I just come from MIT. I got an engineering degree. I took some finance courses. I literally put all my stuff in a van. I drove into the Manhattan. It was crazy and scary and big. I studied for a month and got my Series 7 exam, my Series 63. I went down 33rd floor of Bankers Trust Plaza. It was a trading floor the size of a football field, about 400 crazy alpha males and females screaming their heads off, each making like $5 to $10 million a year. And they would run you over if you got in their way, like literally, physically, everything. And they all said, look, the thing that matters the most is the federal funds rate. That's what the Fed issues money at for overnight loans. And at the time, it had not been raised for a while, and the good times were rolling. And they explained, Brian, when they raise the rates, it makes borrowing money more expensive, which means companies won't borrow it. If you lower the rates, it makes it cheap, which means they borrow it and they spend it, and everybody grows. It's that simple. Yeah. So the lower the rates are, the cheaper the capital. It means you can go finance a new restaurant very cheaply. You can go buy some new cars cheaply. You can start a business. When things are really expensive, it's hard to do that. And so by dialing this up and down, it used to be the only way they controlled the economy when I started. And so we would wait for that rate. And I'll still never forget, I think it was February in 94, they jacked the rates up and nobody saw it coming. They went from 3% to 3.25%, and the whole market freaked out, bottomed out, sold out. Everybody lost a ton of money. And they ended up raising those rates, I think, all the way to 6%, and it freaked the markets out. But what you said was correct. Within the next 10 years and 15 years, that wasn't good enough anymore to control the economy. Now they start changing long-term rates and medium rates by buying back bonds with the cash they had. And that's known as quantitative easing.
Quantitative easing, yeah.
And now you saw that during COVID time, not only do they raise the lower front rates, they now will buy back assets by printing money. And now they can really control what we call the entire yield curve. And that means they can really play with the economy more. And that is now controlling risky assets more. And now, since crypto's getting so big, it's starting to affect our crypto markets. Whereas before they were uncorrelated, now they are.
Exactly. And I think your analogy with kind of like that toning up, toning down is the best analogy. It's almost like when they tone down, like the party is on, right? Like everyone's dancing, having a great time. As soon as they bring back up the interest rate hikes, it's like, oh, the party's over. Let's go back home.
Yeah.
So it's literally that switch. It's like a magic switch.
and their remit is literally two things. It is to keep inflation at a target of 2% yes. and to keep unemployment low. That's all they say they look at. And by the way, how do they calculate inflation? I mean, a lot of people correctly say their calculations are terrible.
Yeah.
Because they don't put rent in there. They don't put housing prices. They pick certain goods. And if you look at a place like Venezuela or some other countries, the government literally can play with that index. And if you think the US government is above that, like you're kidding yourself. And so some people say that index is nonsense. It doesn't really reflect the prices people pay. And the only problem is Trump gets in and he says lower rates because every president wants to ride a growing economy. And so I think handing it to the president is a bad idea because any president will just drop rates to zero. And so I think it's important to have, someone like Jerome Powell with a 5-year cycle that's independent of politics. But I think the whole thing needs revisiting. And so you've got a great graph here where you're literally showing those drops in rates and those raises in rates. And you've got these little smiley faces that say game over. Every time the Fed started raising rates yes. is when we saw crypto bear markets happen, at least the last 2 cycles, right?
That's exactly what I wanted to display on that little graph. Game over means as soon as the investor sentiment started going down because they saw that interest rates would go up eventually based on this machine of this Fed that we have. Then all of a sudden the markets would crash. And you can see here, usually the market tends to peak when interest rates are below 2%. Because as you said, you can borrow money easily, you can trade, you can use it for leverage, brings all that liquidity going back to the previous side. This machine is literally almost once they bring it down, it's like water. The liquidity just boom, just comes into the markets and people have a higher risk appetite. So that's why this whole risk on, risk off market came in. There's too much power, as you said, like coming from the Fed at this point. And I think right now the issue is the reason why markets are kind of sluggish these days is because, originally, as you said, the interest rates, they try to aim for 2%, but now some of the big consulting firms are saying that, we would have anywhere between 3.75% to 4% of interest rates, next year. So the sentiment is not so good. And you saw the inflation numbers are not really, they're a bit stubborn. So people are kind of in this midst of, where are we going? And it's very uncertain. Yeah.
Yeah. So if you see the very end of that graph on the screen, you can see they recently cut interest rates by 50 basis points, which means 0.5%. I think that was like in November. And then they recently in December cut them by 25 basis points. Now, at one point, we expected 3 or 4 cuts at the end of last year,
Right.
but they didn't do that because inflation still looks like an issue. And of course, the thinking is if you drop rates too low, everything grows too fast, and then inflation goes up, which means your money becomes useless. And so now they're being careful. The other thing to look at is the 10-year yield rate is now at a high level. And that's telling the world that, it looks like we might have some inflation and some growth that might be out of control. Even though Trump is saying, I'm going to drill, baby, drill. And he thinks that cheap energy is going to pull all prices down. And I think he's probably right. And so, he doesn't want to see the economy slow. He wants to see rates drop, but it's not obvious they're going to be taking rates down a lot this year. And I think we got that news yesterday. In fact, Bitcoin came off from like 102 down to 97, 96. I think it got freaked out a little bit. So these things are real and they're correlated. That being said, I'm very bullish, and I'm very bullish on this new administration. And I'm surprised, honestly, that we're not even higher, because I think Trump is going to slash and burn. You got a president that is not going to stick to any precedents. He's going to drill, baby, drill. He's already courting investments. So Masayoshi Son of SoftBank already committed to 100 billion, maybe 200 billion. Yeah. There was an announcement yesterday at Mar-a-Lago. The developer, Damac, who is massive here in Dubai, maybe it started in Dubai. You see buildings all over the place. He just pledged to invest $20 billion into American luxury property and data centers. Literally is there at Mar-a-Lago with Trump. You got a businessman in the charge, and now he's bringing literally money into the States. He's going to cut taxes. He's going to drop energy prices. He's going to cut regulation. You got Vivek Ramaswamy and Elon in there, the Department of Government Efficiency, also known as Doge. Not financial advice for that meme coin, but Elon loves having fun. And you got so many things that I think will grow the market and keep inflation low. And you've got a massively pro-cryptocurrency administration. So Trump himself and his sons, Don and Eric, they have their own DeFi protocol called World Liberty Financial. Okay, now look, it might not be significant yet, but the point is they're literally in the markets. His head of commerce is Howard Lutnick, who runs BCG, which used to be Cantor Fitzgerald, which was a huge broker when I was doing business. Their company does all the custody for Tether, the biggest stablecoin in the world. And Bobby Kennedy, when he's not making America healthy again, converted all of his savings into Bitcoin 2 years ago when he got orange pilled by the community. So it's not a couple promises by a president to get votes. You've got almost everyone in his administration pro-crypto. Gary Gensler is going to resign in 12 days' time. Beautiful. We've got a brand new SEC chair coming in who's pro-crypto. So I'm surprised the market doesn't recognize that. And I'm still bullish. I think we'll get more cuts next year. So we'll see.
Yeah, absolutely. I think these targets that we have on the slide, just to follow up on your point, Brian, like Donald Trump himself and his administration can change the name of the game. That's the thing. He has a lot of weight on his shoulders, but you know how much he loves stock market rallies. And it's a huge, one of his validation biases, right? That he's going to want to re-portray again. Yeah. And again, he really cares about finance. He's a financier himself. So
yeah, that's one of his metrics. And there's a great phrase that says, what gets measured gets improved. Yeah. If you have a metric you track with your business, be careful, because you'll do everything to get that metric. And Donald Trump watches the stock market. And when it does well, he thinks he does well. And that's a great sign, I think, for everybody here.
And as you said, if he can drop inflation, which will then impact the interest rates as well, then that's where we get really excited, all of us together.
Yeah, very much so. Talking about the dollar, because, we got some graphs up here that talk about the US dollar index and Bitcoin versus the US dollar. A lot of people have probably never looked at these graphs before. A lot of people don't even look at the dollar and the strength of this one currency, I think, versus other currencies. Why did you include this? Why is this important?
So I got to be really honest. It doesn't come from me. It comes from some really smart macro traders and just economists that understand this topic way better than I do. But there's a very clear correlation to crypto markets and the strength of the dollar. As the dollar goes up, obviously there are pros and cons to everything. Like when you're traveling as an American US dollar overseas, you have way more purchase power. When you're importing goods, it's good. But when you're exporting, it's really, really bad for the economy. And I think what's the issue right now is that we have a strong dollar, but we also have strong inflation. So we don't necessarily have the purchase power of the US dollar. And so it's an issue because if the dollar is too strong, it probably means that there's a lot of demand and people who are a bit bearish about the cycle or uncertain, to say the least. And also maybe there's less power from all the other countries, from all the other fiat currencies that go against dollar, Swiss franc, euro, British pound. So ideally, and like Trump has mentioned this in 2017, he wanted to weaken the dollar because he knew that the global economy and this machine would kick off again, and it's very good for, risk on, assets or markets. So
yeah. But we believe the stronger dollar will pull Bitcoin higher.
Exactly.
And then also it is denominated in dollars as well. And so that's something to watch. We want to watch this metric.
Yeah, exactly. So hopefully, Trump can kind of like retrace the power. The dollar loses a little bit of power, and then, that money goes back into the risk on assets. So you can see here the inverse or the negative correlation is really interesting. As soon as the dollar peaks, Bitcoin price like lowers, and vice versa. When Bitcoin price goes up, the dollar tends to be weaker. So.
All right, we're going to keep an eye out for that. It's definitely going to be fascinating to watch China this year. China's really struggled the last couple of years, and most people were sure that by 2030, China's economy would beat the US. And now people are saying that won't even happen until 2050 or 2070. I think we really started to see some of the holes in their game with the real estate market. And, just quickly, you can talk about socialism versus capitalism all day, and you can talk about the ethics and the morals, but the best argument for capitalism is it's the fastest feedback loop of information possible. What does that mean? It means back in the day in Russia in the 70s and 80s, they might say, okay, we need 4 power plants. Let's go build them and let's hope that works. In America, they only build them if there's a demand for the power. And if there's no demand, they go bankrupt. And so you get this information feedback loop in real time. You got one hot dog stand, it does well, you make 5 more. If no one's eating hot dogs, they all go out of business. And the capital gets allocated efficiently. And I think with China's big boom in the last 10 years or 20 years, it wasn't being allocated efficiently. Now, they were doing a lot of things right, and they got a big population and a lot of promise. But I think, unfortunately, it gave them the wrong feedback loops. And we know they probably overbuilt in real estate, they overinvested, and they were never getting signals that that was the right thing to do. So we'll see what happens, but it's just very bullish on the US, which should be bullish for the dollar as well. So there you go. It's Trump's, I just need Trump to stay alive. All right.
Yes, please.
That's a whole nother episode. Let's talk about new and renewed bubbles. You and I were on the phone a few weeks ago, and you were dropping this IP on me, and I had never heard it been talked about before. You said, Brian, there are these new bubbles and there's renewed bubbles, and they're very different, and people need to understand or they're not going to know how to invest. And I know you've got things down here like GameFi and DeFi, RWA, AI-Fi. What do you mean when you talk about these bubbles?
Yeah, thanks so much for the question. And it's something that I put a lot of thought to it. And I realized that, well, first of all, the pros of bubbles is that it's getting people to compete to create new technology and solve new problems, right? So I was looking at the dot-com bubble, and obviously we have some of the FANG stocks for those who are watching, who came out like, some of the big ones, the big tech like Amazon, and Netflix came on a little bit later, but Google. And so what I realized is, bubble has a bit of a negative connotation to it. When it's actually a huge pro. I mean, that's how we advance as civilization. That's how we build new tech. And what I realized is there are trends that they're one-off wonders and they fade out. So if there is a bubble that's created and you never see it come back, then that's probably, it was just the wrong choice. They were building the wrong tech. But what happens when a bubble comes and goes and then reforms? So the new that renews. Then all of a sudden, then there must be something there because there's demand. Maybe we haven't found the formula yet, but eventually when it will come really big. And so I'm really bullish on renewed bubbles. Like the renewed bubbles, I don't know how many cycles it may take. We had a beginning of AI, crypto stuff with Singularity Net. You had a lot of these founders on your show in the previous cycle. So AI-fi is a reforming bubble. So it's something that's coming back. And we're also realizing on the Web2 side, there's some malpractices, some shady.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.
Hey, I know investing in crypto is scary. It takes a real leap of faith because there are so many scams, rug pulls, and bad actors out there. It's a dangerous business, which is why 95% of people lose all their money. Well, that's why I created the London Real Investment Club, so you can access the hottest deals on the planet and use the crypto bull market to create the generational wealth that you deserve. Join my team of over 100 people from around the world that are making millions of dollars behind the scenes investing in blockchain, AI, Web3 games, DeFi, Bitcoin, and more. Don't miss out. Click the link below to book a call with one of my team now. But hurry, this bull market will end soon.
I know investing in crypto can be scary. That's why you gotta join the investment club. Pull the trigger. Let's do this.